Happy Australia Day, Market Monkeys. This is our latest video providing some support for how to read market indicators, the 7 steps of active investing. And you can visit the 7-step strategy on the Market Monkey website or take our Essentials course, which takes a deeper dive into analysing stocks and the stock market using technical indicators. So let's dive into the market for February the 24th, 2025, and looking at some stocks for analysis, which includes ANZ, Car Sales, Cochlear, WiseTech, BHP, Santos, Coles, and Woolworths. Let's dive in. Okay, so let's start with the ASX Top 200, and Australian shares rose on Friday for their third week of consecutive gains, which was helped by gains in the banks and some discretionary stocks, which is ahead of some Aussie inflation data next week, which is expected to lead to lower interest rates. The S&P 200 benchmark index closed 0.4% higher, and the index has risen 1.2% this week, its best performance in a month. And it has also gained almost 2% in the past 3 weeks. The market is anticipating a fourth quarter inflation report next week, which will solidify expectations that the Reserve Bank of Australia will cut borrowing costs in its February meeting. But all of that aside, we are looking at the technicals of the chart, and as you can see, our market entered a technical probable uptrend back here in November 2023 and continued to make a bullish move up into 2025, indicated by Guppy multiple moving averages long-term trend group. And the traders are continuing to move the price between this price channel and expecting, given the current rise in the market, that there might be some further gains into reporting before taking a breather. So we're currently pushing up towards this possible resistance level at 8,500 points, which might provide some challenge to the market to break through this level in the short term. But looking forward to seeing what the market does at this time in reporting season. And if you have a look at the seasonals off to the right, you can see that the market generally provides some gain into February reporting. And then the story after that is quite varied based on the last couple of years. So let's watch the market as we move into February. Okay, so moving on into some specific stock analysis. First of all, looking at ANZ, and if we have a look at our technical indicators, we can see that our buying is quite below average, even though there are some buyers who are purchasing ANZ, but it doesn't seem to be enough to break out of this current downward trend. So you can see that ANZ broke through the long-term indicators back here in October, November, and they've made a small push up, but we will wait and see whether the amount of buying continues and will continue to push that price higher. But currently the risk is to the downside as we wait to see what ANZ does into February. Car sales is currently in a little bit of a pullback, and we can see that the buying is below average, although there is high buying. So that level of high buying is starting to push the price up and continuing to keep the price for car sales above our long-term moving average lines. So currently still quite bullish, even though currently in a short pullback as we move into February. Cochlear, we can see that it did quite a strong pullback back here in June 2024 and then technically moved into a downtrend later that month and has broken through all of the long-term trend lines. So now we're in quite a compressed price phase for Cochlear, and this is perhaps due to the very low buying, and although there is some moderate pressure on buying, it's quite below average. So it may struggle to push up too much further in the short term. So let's wait and see what Cochlear does into February. WiseTech, like many stocks at this time, the buying is quite below average and there's still some selling of WiseTech. So currently that level of selling may make the price relatively weak as we move into January. So we'd want to see some buying move in if this price is to move up. Otherwise, currently, while the risk is low, we've just got a bit of a flagged warning here that we may be about to enter a downtrend. So just looking at this stock with caution. BHP, we can see that it's been quite a strong downtrend back here since December 2023, and the multiple moving averages for the long-term investors is to the downside. So currently the risk for BHP is quite high. We are experiencing low volumes and selling, and so we're currently probably bouncing around above this support level of about $38.50. But currently no moves to the upside at this point. So proceeding with caution with BHP. Looking at Santos, and while the buying is below average, there is quite moderate buying, and so that has pushed the price up back above the current downtrend lines. So whether this is just a short uptrend into a bit of a retracement before we move down again, currently at a bit of a critical point as to which way this stock will go, and likely sideways and perhaps into a retracement. So the current risk is quite high for this stock at this time. And looking at coals, really lots of very, very low buying at this point, and that probably makes sense given that we are up around this all-time high of 2022, and so experiencing some weakness around this point. But we may still hover up around this level as we go into reporting season. Beware of a possible rejection of this support line and potentially a retracement, and it's always a bit risky around these points, so perhaps waiting to see what the market does around this level. Although we are still quite in a strong uptrend, so the mood of the investors is still quite positive for Coles Group. Lastly, moving over to Woolies, which is quite a different story here. We can see that it's been in quite a strong downtrend with the guppy multiple moving averages pushing down and the downtrend markers marking some steep declines at several points. And while there have been some short retracements, it hasn't been enough to break out of that trend. But we can see that the selling is quite low now, and we also see very below average market volume, and we may be coming to rest down around this $30 mark, but whether that then pushes through into February to the downside or up, it's currently at a fairly pivotal point, and so the risk is still quite high in terms of the direction of Woolies price at this point. So Woolies will be an interesting one to see if there is a retracement into February, but too early to tell probably at this point. So I hope you enjoy that little breakdown of the market and some stocks as we move towards the end of January. And as always, check out the 7 steps on the marketmonkey.com.au website to break down these indicators into further detail. Otherwise, have a great weekend, and we will be back online very soon. For more information about our expert coaching to actively invest in Australia's top blue chip companies, Don't forget to read more about us at marketmonkey.com.au.